The feds just made it a lot easier to get a mortgage loan, even if you have a ton of student loan debt. So if you've been wanting to buy that house, but your student loans are holding you back, you really want to watch this video so you can get the 411 on how this update impacts you. Hi, my lovelies. This is Nobu with MakingSenseOfDebt.com, where we discuss understanding finances, leveraging debt, and finding your financial freedom, whatever that looks like to you. If this is your first time on this channel and you like to talk about money, credit, or real estate, go ahead and hit that subscribe button so you don't miss the next video. If this is not your first time on this channel, thank you so much for coming back. I appreciate the support. The Federal Housing Administration just announced changes in how lenders should calculate student loan debt when qualifying borrowers like you for mortgages. So who is the Federal Housing Administration, and why should you care what they have to say if you're maybe getting your loan from Chase? When folks are getting mortgages, they are usually going to get either an FHA or a conventional loan. That FHA stands for Federal Housing Administration. So when you hear that loan that's 3.5% down, that is an FHA loan. Both the FHA loan and the conventional loan are backed. They are insured by different government agencies. This insurance guarantees that if the borrower doesn't pay the mortgage, this government agency is going to pay back the bank with that insurance policy. So in order to qualify for this insurance, there are certain minimum qualifications that lenders have to follow. They have to, at the bare minimum, meet that requirement. But if they choose to, they can have stricter qualifications as well. One example of the rules that lenders have to follow for FHA loans is the calculation of student loan debt. For FHA loans, remember that loan was at 3.5% down. Lenders were required to calculate student loans as 1% of the total balance that somebody owes. So even if your student loan is in forbearance or deferment, or even if your student loan is actually a lower payment, lenders would take the total amount that you owe and apply 1% to that. So for example, if you owed $75,000, the lenders would take 1% of that, which is $750, and that would be allotted as your monthly payment for that loan. But with the new FHA rules that were announced on June 17th, 2021, that 1% rule is no longer a thing. Whatever the monthly payment amount that is showing on your credit report, that is what will be used for your monthly payment. So let's take that first example that we use where you owe $75,000. If your monthly payment for all those different loans adds up to $420, then that is what the lender is going to use. And by the way, if you are getting ready to buy a house and you don't know what else you need to worry about to get ready, go ahead and grab my free home buyer's checklist. I will go ahead and drop the link for that in the description box below. So how does this FHA update actually make it easier for you to get a loan? With that same example of somebody that has a debt for $75,000, with the old rule, $750 would be applied to their debt total, whereas now it would only be $400 and something that would be applied to that debt total, which means that there's a little bit more room to be able to qualify for this mortgage. Another one of the rules that lenders are required to follow is around something called a debt to income ratio. When you hear about a debt to income ratio, all that is the percentage of your salary that goes towards different debt payments. For an FHA loan, when the lender adds in your student loans, your car payment, your credit card payments, whatever debt payments that you have on a monthly basis, and then they add in your projected mortgage payment, all of those different payments should not add up to more than 43% of your pay. So if we think back to that example again, if a lender is calculating your loan payment at $750 when your payment is in reality $420, that means that you are being shortchanged a whole $300 that could potentially impact you qualifying for a mortgage. So with the new update, it just makes things a little bit easier and less stringent so that folks that might have a really good credit score and also happen to have a whole bunch of student loan debts don't get screwed over, and they can have an opportunity to buy a house as well. It's important to remember as well that 80% of FHA borrowers are first-time home buyers. And right now, first-time home buyers are probably millennials, which, as you know, have a ton of student loan debt. If you are like me and Auntie Sally Mae is not your favorite person in the world, please go ahead and drop a comment below and let me know that you agree with me and that I am not alone. Another good thing about this new change is out of that 80% of first-time home buyers, I can't tell you how many of those are millennials, but a little bit of half of those 80% of people have student loan debt, and the majority of those people that are impacted are people of color. So this new update not only makes it easier for folks with a whole bunch of student loans to get approved for mortgages, it also makes it easier for people of color, which hopefully will in turn play a role in reducing the wealth gap. So when will lenders start to make these changes? Technically, they can start to make these changes right now, but it really is going to depend on each lender specifically. So if you are currently in the middle of getting a mortgage, you should call your lender and find out when and how they're going to implement this. If you're just getting started in the mortgage process, then make sure you ask your lender how they will be calculating student loans before you even get in too deep with them. And also don't forget to grab the free home buyers checklist to help you stay organized as you're getting ready to buy that first house. With that, my lovelies, thank you so much for watching. I will see you next time as we continue on our journey to financial freedom. Peace.